So what I'm going to talk about is just a few observations of what I see in the general market, and maybe even do a little sector top-down type stuff. And I don't really have any individual stocks today. I might have one, but this is what's really standing out to me. Let's just get right into the market recap here. So this is our S&P SPY chart, and as we can see, it's been extremely uh, competent in bouncing off of the 50-day moving average until we got up here to where we are now. Let's just zoom in, and I see something a little different. I see a couple things, all right? I did mention in my webinar the other day, this big gap down here, then we traded up right under that 50-day moving average, which has been acting as support. All of a sudden, it's now acting as resistance. And then we rolled back down and actually made some new fresh lows down here. This is a very bullish short-term pattern. I call like a horseshoe, or in this case, an upside down horseshoe. But then fast forward 2 days, yesterday we had a big gap up, and I've got something to show you on that as well. And it looks like today, for the most part, we just kind of sneak in here to the 15-minute. Yesterday's gap up was kind of short-lived, and it's just been grinding for a day and a half now. Been grinding back down. The sellers are kind of trying to make themselves known, and I think that's to be expected, really, because the market is under pressure, in my opinion, to borrow a line from my friend Brian Shannon. After seeing what we just saw there, that gap down and that rolled over to lows, we are now under the moving averages, and I'm going to say the market is now guilty until proven innocent. These price wicks need to get back above, definitely need to get back above the 50-day moving average, because this seems to be our pivot level right now. Again, what was once support is now acting as resistance. And so the price is down here below the 50. If we can get a couple closes back above that 50, well, then the damage may be done. But I kind of am in the camp that the damage is not done. Like I said, the market's still guilty until proven innocent. These moving averages, okay, the 10 is the momentum moving average, the 20 I call the backstop, and then there's the 50, which is kind of our bigger picture. One thing I noticed, which was interesting, was again, yesterday we blasted through the open, probably a lot of short covering for people down here who didn't get follow through. But after that was done, again, we just had this grind lower all the way into the close today, pretty much. We can take a look at another indicator without using my moving averages. I'm going to show you, we go right here and we click into that menu and we grab this anchor. And again, this is also from our friend Brian Shannon. We select the tippy top of the market there, and it's now giving us a VWAP, an average value weighted average price, VWAP, from the top of the market. So everybody who bought or sold, I should say, the top of the market, they're still in the money. And so what we watch for is the price action to try and definitively get back above and close above these indicators, much like a moving average. Well, as you can see, this VWAP has been holding pretty solid. And then yesterday, that attempt to blow through, if we had closed above it, we didn't. But if we had, it would have been much more constructive. But we didn't. We're back down below yesterday. We gapped up to it, and we're back down below again today. So again, that's the average weighted value price in the S&P 500 using an anchored VWAP. So that's something of interest. Just another nail in the coffin there is saying the market is defensive and is going to need to figure out what it's going to do to try and get back above, again, our pivot line there in the 50-day moving average. The last 2 days, yeah, we had a gap up, but we didn't go anywhere. We've just been grinding back into it. So that's our big bellwether, the S&P 500. The NASDAQ and the QQQs, a bit more tech-laden. Same kind of a story going on over there. We had the gap down below the moving average, rolled up, and then slammed back over to even fresher lows. The NASDAQ seems to be a bit more in a hurry to sell on the days when we're selling than the S&P does, and I think I'll show you why that is in a second. The big tech bellwethers have been selling off. The Apples and the Amazons and the Googs have not been holding up very well, and they've been dragging the NASDAQ lower. But same thing over there, NASDAQ, the Qs, guilty until proven innocent. I'd like to see a close at least above that declining 20 and a close above that 50. But for the most part, we are still in kind of just a little downtrend. We're making little lower highs as we go here. Lower high, lower high, lower high, lower high. We'll see what happens. The IWM, I will say, the Russell 2000, the small caps, they're kind of in a wedge. They could go either way. But that's really all they've been doing for the last couple of months. They're just looking for a direction over there. Before I give it back to Chris, and just to kind of harp on what I think the interest is well, we know energy has been strong. Energy has been very strong. That's our XLE. Oil service has also been extremely strong. I think some more strength is going to be coming out of that. But one of the reasons the Nasdaq's not doing as well as the S&P is I think the financials. I'm going to pull up the XLF here. I think this is an interesting looking chart, totally different than what we saw over there in the indexes. We're in clean air, we're above all of our moving averages. And if we just go to the banks real quick, the KRE and the KBE, those are some nice looking trends. It could be some movement in interest rates moving higher. It's always possible, and the financials might enjoy higher interest rates. Um, we're going into the weekend. I haven't even begun to look for a trade of the week, but we'll come up with something. One thing that did come through Barry's scanner here earlier was Easy PW, Easy Core, and this is consumer lending, so it's kind of fitting right in with the financials and the banks. It actually finished a lot stronger than when I last looked at it. So keep an eye on this guy for Monday for some possible follow through. As the sector is strong, that's a pretty strong individual name, but in the scheme of things, as far as the market recap goes, yesterday and today were not much of a follow through after a big bang up job of gapping the market up yesterday. So I'll be watching this declining 20-day average. Technically, it took the price yesterday and today and closed it back below. So when you have prices moving up and then wicking through and falling back down below moving averages that are sloping down, it's just a way in which you can interpret there is pressure going on in the market. And I'll just end with this. Like I said before, the market right now to me is guilty until it can prove itself innocent. All right, well, that's all I got, Chris.
Awesome, Steve. Really appreciate that. Like I was telling them earlier, always look forward to the Tuesday market recaps with you with the trade of the week.
All
I
right,
never miss those. So
good to
uh,
know.
hopefully that all worked out well for you. So I'll let's see if I can switch back to
Yep,
me. Perfect.
looks like you're switching back. All right, so it looks like we're going to get the
Awesome.
hang of this after all.
I think so. I think so. All right, Steve. Well, you go get your weekend started, and I'll wrap things up here with everybody.
All right, thanks. Have a good weekend, everybody.